Welcome back, everybody, to another episode of Fintech Fridays. I'm Brian Vieaux, President and Chief Operating Officer of FinLocker, and pleased to have join me for this episode, Brian Geary, who's the Chief Commercial Officer at Argyle. Brian, welcome.
Thanks, Brian. Thanks for having me. Long-time listener, first-time caller. So excited to be here.
I love it. That's the first Howard Stern reference, I think.
Yeah, exactly.
Yeah, it's funny. As I was prepping the studio, I got a LinkedIn message from somebody wanting to connect with me. And then I, of course, click connect and I get a message says, big fan of your podcast. And it's one of your colleagues from Argyle. Must have known you were coming into the studio.
Oh, there you go. Yeah, we're repping it already.
Yeah, I love it. So I'm super excited to dive in. I, of course, have a pretty good understanding of Argyle and what you all do. We FinLocker and Argyle have a partnership and an integration. We integrated with you all, and we effectively make the income and employment verifications available to customers through our verification services platform. That's step one. Step two, we're working on pulling forward that integration and exposing it in our consumer locker experience. And I think we'll come back and talk about that because it's going to be pretty cool once that's there. But maybe for our audience that doesn't know you personally, maybe a little background on you and how you got to Argyle, and then we'll talk a little bit about who Argyle is.
Yeah, perfect. Sounds good. All right, so quickly, my background, I've been in the kind of lending and fintech space for the last kind of 20 plus years. Started in the banking on the banking side, moved over into fintech, had a stint in kind of small business lending, and then started selling loan origination software into the banks, both for consumer and small business lending. Really all about how do you digitize that process, take it from the analog branch-based into the kind of modern era of having that done online, but not only just like kind of taking the application online, but also how do you kind of automate the steps behind the scenes that allow you to automate credit decisions, fraud decisions, KYC decisions, et cetera. And so part of what brought me to Argyle was having been in that kind of consumer lending space and seeing the amount of friction that there is around verification of income and employment, and the friction there is for the consumer that needs to go and find their pay stub or W-2, download it from their payroll platform, email it or upload it to a system, but then really the friction for the lender, who then needs to kind of take that data, verify that it's not fraudulent, key in the data, do kind of manual calculations on it. And so just kind of a lot of inefficiency and process that has to go into that. And obviously we're going to talk about today, there's a better way to do that, right, which is much more automated.
And so essentially what Argyle is doing is you've created the pipeline to allow consumers to connect digitally to their payroll data and share that with the lender, right? In a nutshell. Yeah,
exactly. Yeah. So the high level of it is, we've built connections into payroll platforms, all of the large payroll platforms of size and the names that you would recognize. That also includes kind of gig scanners or gig platforms. It includes large companies that have their own proprietary systems. It includes kind of government agencies, et cetera. So it's a pretty wide swath that we've built. We think it's roughly 80% of the U.S. workforce that we have today. And so, what we're doing is we've built these connections into payroll platforms, and then with the output of that is helping lenders to automate those connections so they can automate the verification of income and employment that is in their process today.
So for our audience, mostly, mortgage folks, and I came out of, before joining FinLocker almost 4 years ago, I came out of 28 years in the kind of primary mortgage origination space. And so for me, my history, I have a vivid recollection of the old school verifications of employment. Literally in the early days, maybe driving by and visiting an employer to verify somebody worked there, right, as a loan officer. And so, probably most recently, the last decade, folks are very familiar with at least one very sizable vendor for VOE, VOI, right? Verification of income, verification of employment. And of late, we've seen a trend for that particular vendor to really become very expensive in the context of kind of the overall origination process. By contrast, a connection with Argyle and the VOI, VOE, maybe talk a little bit, just, we don't have to get into the numbers and talk about pricing, but maybe just, T-shirt size, when you compare and contrast to kind of the market leader for that service, what on average, kind of how different are you seeing those costs?
Yeah, exactly. You're describing the problem that we're solving very accurately. There's obviously kind of one large kind of dominant player in the space today. Prices are increasing, and coverage is, what we hear from lenders is, kind of low to medium. It's in the probably kind of 30% range of customers that if they're kind of trying to pull that data, you can actually kind of get it back. Or you're going the kind of manual process. You're asking for these documents, gathering them, or making the phone calls, yourself, or kind of outsourcing that. So both of those have kind of costs. To answer your question directly, for that kind of comparing us to some of those large providers that exist in the space today, we're in the kind of 10 to 20% range, t-shirt sizing it, of the cost to use us. So that's the big advantage. That's like the kind of big value prop that we're bringing to the market, is there's a lower cost way to do this with potentially higher coverage. So if they're covering 30%, we're covering 80%. There's a delta in how many folks can actually go through this, and you can do it less expensively. So again, most of my audience will know this process, and they've already figured out who the large player is. So we don't have to name names. That's the beauty of that. But there's a difference. There's a significant difference in how Argyle enables access to the consumer's payroll data, right? And how this other player enables that. And I think you hit on one of the impacts of that difference is the coverage, right? Certainly. Yep. But maybe describe for our audience at a high level kind of what those differences are, because there is some, it's not like it's apples to apples necessarily. There's more consumer involvement needed in your solution than the other player. But again, the benefit is both cost and coverage. Exactly. Yeah. So the rough, customer experience using Argyle is the customer is granting access to their data, so they have control over their data, and again, like the kind of rough customer experience is they're putting their user ID and password in to connect into their account, access their data, and they're using us as essentially a data transfer agent. So they're telling Argyle, they're giving us instructions. Take my data from point A and deliver it to point B, and point B, being in this case a mortgage lender. So that's the customer experience. What we've heard is that I think customers like this. They like the empowerment part of being able to control their data. In kind of legacy business models, that is not the case. Their data may be being kind of sold without their knowledge, or kind of ending up in a database without them knowing about it. So this puts the kind of control squarely in the in the user's hands, and it's a pretty simple process. Like if you've seen the demo of ours or know the space at all, it's 2 or 3 steps to be able to access your data. Yeah. So we at FinLocker, as I mentioned, we're partnered and integrated with Argyle. Our verification services product consists of verification of assets, VOA, verification of income, verification of employment. And Argyle is our partner for that VOI, VOE service. And I've tested it as a consumer, and it's a pretty slick process, right? So the lender who's partnered with FinLocker and integrated with our product, their customer is invited to this portal. And in the portal, they're able to create an account and then link to their asset accounts, their bank accounts,
as well as their payroll account. And the process is virtually the same. It's user ID, password. There may be an MFA, right? There may be a multi-factor authentication step based on the platform that's required. And then from there, to your point, that consumer is selecting the data set and essentially permissioning access to it by the lender. In our platform, I believe it's over a period of time, I think 60 or 90 days, so that the lender can do refreshes as needed. And then at any time, the consumer can disable that share. So to your point, the consumer is not only permissioning it, but they're in control of who sees it, who accesses it, and for how long.
Exactly. And you brought up a great point, which is this is a pretty common practice now on the asset side.
Yeah.
So folks have gotten comfortable using some of the bigger players in the banking aggregator space. And so we're doing virtually the same thing, but we're connecting to payroll platforms versus to bank accounts.
Yeah.
And so customers are kind of used to this. So they've seen it now for probably 10 years on the banking side. So it's becoming more and more comfortable that they would do this for the payroll side as well.
So when you talk about coverage, which is probably the number one question. Well, the number one question is always cost. People want to understand cost because they're trying to shave costs off their process, understandably. But then coverage is the bigger aspect of it. So at 80% of kind of the U.S. employees, are there any like known employers that are gaps today, or is it mostly like kind of smallish, more small businesses?
Yeah, I mean, think, from our perspective, we started from the top and are working our way down. And so what's left is the long tail of you not using a payroll platform.
Yep.
Or there are a long list of payroll platforms that exist out there. We've integrated to a lot of those, and we'll continue to kind of build on that. But there's still some that we haven't gotten to yet. So that's what makes up that kind of 20% that we haven't gotten to.
And then from your experience, what you guys are seeing, thousands, if not more, transactions coming through your platform. What's the general consensus feedback from the consumer? Do most consumers know their payroll credentials, or is that a little bit of a friction point from your perspective?
Yeah, honestly, it's very similar to do you know your bank password? And so we're seeing similar conversion rates to that as well.
Yeah.
Not 100% of folks are comfortable using it or know their password. We also have lots of kind of tricks to help folks. There's links from our experience where you can go and reset your password if you've forgotten it and don't know it, et cetera, to be able to kind of help you through the process. So again, like we're seeing similar kind of results to what the banking aggregators are seeing on our side as well.
I know when I'm talking to lenders about our, the verification services product, and we're kind of talking about these best practices, the reality today, and maybe you know this better than I do, the reality of it is probably less than 10% of employees across the country actually get a paper pay stub like on their desk or mailed to them anymore, right?
Exactly.
It's either coming via email or they never even see it. It's just, direct deposit. And then if they want the details, they log in to see it.
Yeah, I think it's predominantly you don't even get it via email anymore.
Yeah.
It's showing up in your payroll platform, and you may get an email that says you got paid, but you probably just see the ACH in your bank account. And you could always go in and check your pay stubs. Obviously around tax time, you're going in and like downloading your W-2s. That's the typical process.
Yeah. So when we're coaching loan officers, and I'm sure you guys are doing the same thing, the coaching of the loan officer is for them to coach their consumer to be ready when they're coming to that stage of the application process. These are the things you should have ready. Your user ID and passwords for your bank accounts that you're going to use to verify assets. Your user ID and passwords for your payroll accounts that cover the last 2 years. So if they recently had a job change, they'll need to sync into potentially 2 different platforms. or if they have gig jobs, multiple gigs that they're working, then they're gonna have to have access to those as well. So I think it's really, to me, it's always been about coaching. And you go back, I even go back to when verification of assets and day one certainty with Fannie Mae kind of became a thing. The lenders and loan officers that were successful had a script and they coached to it, and it just became part of their process. And I think we're starting to see that happen more frequently with verification of income and employment as well.
Yeah, totally agree. And that's part of our, as we start to onboard mortgage lenders, and we've got a number of folks using us today, part of our script, at the beginning of our implementation is really training for the processors and loan officers. So helping them to coach their borrowers, to understand how the tool works, so they get comfortable with it. And we've seen it takes maybe a week or two for them to get comfortable and incorporate it into their process. And once they do, they're kind of off to the races. And then they're seeing this reduces friction on them. They don't have to chase borrowers to grab these documents that are probably a pain in the butt to go and find and download. And then it's really helpful for that processing team once the documents actually would come in that more manual process today, where they don't have to spend all this time reviewing them, categorizing them, et cetera. We're doing all of that work for them. And that's maybe something we didn't really touch on so far, which is not only are we connecting into these payroll platforms, but as you can imagine, data looks very different on pay stubs, depending on what employer you work for, what payroll platform you work for. And so there's a lot of burden on processors to have to decipher what this character or description means to plug it into your income calculator. And so we've basically done all of that hard work as well. So we basically categorized all the income from all of these different payroll platforms, and we normalize that into one data model. So the output that folks are getting is a GSE ready, everything is categorized and base, bonus, commission, overtime, and other, exactly how you'd want to see it, or you're getting it from some of the legacy players today. And so it's just cutting that very kind of manual step out of it.
Right on. So it's always a question that comes up. So we'll tackle that one.
Yeah.
So I want to kind of pivot a little bit, stay within the mortgage, vertical, if you will, but this could apply to any other financial services vertical where verification of income and employment is necessary. So we've had some experience together in creating a proposal for a few large originators, and we got creative around the structure and the access to the data. And maybe we can just kind of riff on that a little bit and talk about where, with a platform like Argyle, where verification of income can go from a access point much earlier in the process, but also from an economic impact by leveraging it earlier in the process. So maybe we can just kind of talk a little bit about that for the next few minutes.
Yeah, absolutely. We're seeing this across a couple of different verticals, to your point, consumer lending as well as mortgage, where there's a desire to have, we call it, our nomenclature is a light report. You could call it a pre-qualification report, or something basically in that kind of earlier stage in the funnel that is less expensive. And you don't need the entire kind of data set or report, but you need enough to know, does this borrower meet my basic qualifications? And should I send them on to the next step in the funnel, which is likely kind of credit decisioning and all those next steps. And so I know that, Brian, you and I have been talking about this a lot. We've built a lot of the technology on our side to enable this, to have that, call it kind of pre-qual or light report at the beginning. So you could, you basically kind of have this step as an early kind of stage in the process. Then we can give you a full report when it's that time. And then we can also kind of come back when it's that verification of employment prior to close and just get that report. So we think about these as distinct reports that you can get, all with kind of different price points tailored to what's going to make sense for the lender at that step in the process.
Yeah, I love it. I mean, I know in a couple of these proposals, there was definitely a lot of head nodding from these lenders, because they have, they all deal with fallout, right? There's there's fallout from the point of application to closing. There's fallout from even underwriting to closing. And so the more that you can kind of compress and manage the cost up the funnel, right? Then you just manage. Then fallout's not as critical as it relates to that particular report you're buying. So the point is, if for 15 or 20% of the total cost of a report, you can use the data across your entire pre-qual population. As loans get to certain segments, and I think this is what you were stating, you order the next best report for the stage that you're in, and then it's only at that last stage, potentially at closing or just after closing, where you're kind of getting the full value report. And so the models that we ran were super interesting and compelling, and I'm super excited just to see where that goes in the mortgage industry. But to your point, it's really scalable across any other vertical that's verifying income and employment.
Yeah, exactly. We're starting to see a lot of interest in that model, which is cool. And it's all based on the premise that lenders don't want to pay for the full report if they don't have to.
Right.
And so let's try to kind of size the cost for like the appropriate stage of the funnel. And when you really need this borrower is approved, now it's time for verifications. Like let's pull a full report.
So in the last few minutes, maybe I'll just talk a little bit about kind of what lies ahead for the FinLocker Argyle partnership. We started in our standalone, verification space, which we've talked about. We've always had the roadmap in our consumer locker product, our financial fitness app. We've always had on the roadmap the ability for the consumer themselves, not necessarily as part of a mortgage transaction, but for them to be able to link directly to their payroll data. And in the context of what we're doing with our app, which is, financial fitness, budgeting, goal setting, spending analysis, credit monitoring, credit simulation. But we do that today in the context of this journey towards home ownership and mortgage readiness. And so the value prop for a consumer to be able to link directly to their payroll data in our app brings more certainty to where they are with respect to being ready to apply, right? And so when you think about what we were talking about in terms of the friction point between consumer and lender, sometime this year when that integration is completed, there'll be no friction anymore in the mortgage transaction, because we would have had a consumer in this FinLocker for 3, 6, 9, 12, 18 months getting to a place of mortgage readiness, sitting on top of their payroll data, every other Friday or whatever their pay cycle is, the locker would always be up to date. And then it's, at the end of that readiness journey, when they're ready to apply, now they're sharing the data from the locker that includes their asset data, the liability data, any profile data that we've learned from the consumer, plus that direct payroll data, which would also include, those income reports or the pay stubs, et cetera. So
right.
I'm assuming that we're not the only, fintech that you're, talking to and partnered with that's thinking about consumer payroll data as part of a non-lending experience and more of a financial fitness experience. Is that fair to say?
Yeah, I mean, what I like obviously about FinLocker, and you like it too because you're there, is like it's a different model in the space, right? So you're thinking about mortgage readiness before it's exactly time for that transaction. So you're helping the customer in advance, be ready with all of their data when they're ready to actually buy a home, when they're kind of financially secure enough to buy a home. And so again, like super excited about the partnership that we have there as a different angle for the mortgage market, which is cool. Obviously, we're working directly with lenders and others when it is time for that transaction, but this is distinct and different in that it's really thinking about it ahead of time. but before most folks are really thinking about that.
Yeah, I love it. And I mean, we're aligned with the way we think about consumer permission, consumer control, right? And so this is the ultimate use case for a consumer who may take 6, 12, 18 months to get ready. They're using their data as part of that journey towards readiness, but then they're in control to share it when they're ready to transact, which is the whole, the spirit of both of our platforms for sure.
Yeah, absolutely. Agreed.
So, man, this was super, super interesting for me. I learned more about and love more about what you guys are doing at Argyle every time we talk. I appreciate you making time to record this little podcast episode, and looking forward to the great things ahead at Argyle. Thanks for joining, Brian.
Yeah, appreciate it, Brian. Thanks for having me, and excited to be part of Fintech Fridays. Again, been listening to the show for a while, so so cool to be a part of it, and appreciate our partnership. And I'll see you on the conference circuit here. It starts pretty soon.
It's coming up, man. It's coming up. Thanks everybody for tuning in. We'll see you next Friday.